In a world of financial noise, let's find the signal. Welcome to Smart Money Sense. $162 billion. Gone. Wiped from the crypto market in a flash. $1.65 billion in leveraged dreams liquidated. Vanished. This is the brutal reality of what analysts are calling Red September. If you've looked at your portfolio recently, you've felt it. That pit in your stomach. The market is a sea of red, and the question on everyone's mind is a simple but terrifying one. Why? Why is this happening again? Many will tell you it's just another Tuesday in crypto. But what if I told you this wasn't random? What if this was a predictable, almost cyclical event that has a name? They call it the Bitcoin September Curse. And in 2025, it has returned with a vengeance. In this video, we're not just going to look at the numbers. We are going to uncover the 3 hidden catalysts that created this perfect storm. We'll analyze if the Bitcoin September Curse of 2025 is a history lesson repeating itself or something far more calculated. And most importantly, we'll determine if this is a devastating trap or the generational buying opportunity you've been waiting for. Stay with me because understanding this could be the most important financial decision you make all year. So let's get the facts straight. The global crypto market cap, which was comfortably sitting above $4 trillion, has shrunk drastically. Bitcoin plunged below $112,000. Ethereum, the king of altcoins, is desperately trying to hold the psychological $4,000 line. But the real story, the one that shows the sheer panic, is in the liquidations. Over $1.65 billion in long positions were forcibly closed. To put that in perspective, that is the single largest liquidation event of the entire year. Imagine thousands of traders betting on the price going up, using borrowed money, only to be wiped out in a cascading tidal wave of forced selling. This isn't just a dip, it's a bloodbath. And it's moments like these that separate the informed investor from the crowd. If you're finding this analysis valuable already, do me a favor and hit that like button. It tells YouTube that this content is important and helps us reach more people who need to hear this. Your single click makes a huge difference for a small channel like ours. Now, about this curse. The Bitcoin September Curse isn't just a spooky story crypto veterans tell new investors. It's a historically documented phenomenon. Looking back over the last 12 years, September has been Bitcoin's worst performing month, posting negative returns a staggering 8 times. Think about it. 2013, a 15% drop. 2017, a brutal 40% collapse in just 2 weeks. 2021, another 25% wipeout. And now, the Bitcoin September Curse of 2025 is unfolding right before our eyes. But why? Why September? Is it just a coincidence? A self-fulfilling prophecy? Or are there real, tangible forces at play? The answer is all of the above. Lower trading volumes as summer ends. Traders returning from vacation and rebalancing portfolios. These are contributing factors, but this year 3 specific powerful catalysts have converged to turn a seasonal dip into a full-blown crisis. The first and perhaps most powerful driver of this fear is coming directly from Washington, D.C. The threat of a U.S. government shutdown is no longer a distant possibility. It's a near certainty. Prediction markets, which are often more accurate than polls, are giving it a 77% probability. That's the highest it's been all year. The White House is already telling federal agencies to prepare for furloughs. So, why does this matter for Bitcoin? Because a government shutdown injects massive uncertainty into the economy. It spooks investors, and in a risk-off environment, investors flee from assets they perceive as speculative, like cryptocurrencies, and run to traditional safe havens like the US dollar. We're seeing the dollar strengthen right now, and that's creating immense downward pressure on Bitcoin and the entire crypto market. It's a classic flight to safety, and right now, crypto is being left behind. The second catalyst is the $1.65 billion liquidation event we mentioned earlier. But we need to understand why it was so devastating. This wasn't just regular selling, this was a leverage-fueled atomic bomb. Platforms like CoinGlass reported that some traders were using up to 60 times leverage. 60 times! That means for every $1 of their own money, they were borrowing 59. This creates an incredibly fragile market. A small dip in price forces these positions to be automatically sold, which pushes the price down further, which triggers more liquidations and so on. It's a death spiral. This is a painful but necessary cleansing of the market. It shakes out the over-leveraged, speculative paper hands and transfers wealth to those with a long-term conviction and cash on the sidelines. The scale of these liquidations tells us that the market was dangerously overheated, and this crash is the painful consequence. The third catalyst is the puppet master of the global economy, the Federal Reserve. On September 17th, the Fed did cut interest rates by 25 basis points, which should have been good news for crypto. Lower rates generally make risk assets more attractive. But it was the tone that mattered. Fed Chair Jerome Powell's comments were cautious. He spoke of no risk-free path, essentially telling the market not to get too excited. This lukewarm message poured cold water on the rally. Now, all eyes are on the upcoming PCE inflation data. This is the Fed's preferred inflation gauge. If that number comes in hot, it could kill any hope of more rate cuts this year, which would be terrible for crypto. If it comes in cool, it could reignite the market. The entire financial world is holding its breath, and that uncertainty is weighing heavily on prices. So if you're trying to make sense of this market, you absolutely have to understand these macro forces. This isn't just about charts, it's about global economics. If you want to stay ahead of these trends and get these kinds of deep dives before anyone else, make sure you subscribe to Smart Money Sense and turn on notifications. You won't regret it. So with these three catalysts battering the market, where do we stand? Bitcoin is fighting for its life around the $112,000 level. Technical analysts are now eyeing the max pain level for the upcoming $17.5 billion options expiry, which sits around $107,000. It's a common pattern for Bitcoin to gravitate towards this price point during a major expiry. A break below that could send us toward $100,000. Ethereum is in an even more precarious position, wrestling with the $4,000 support level. Because so much of the DeFi ecosystem is built on Ethereum, a drop in its price has an outsized ripple effect on hundreds of other altcoins. Open interest in Ethereum futures has plummeted, showing that the leveraged players have been decimated. This is where it gets interesting. Amid all this retail panic, what are the institutional players, the so-called smart money, doing? The data is mixed, which tells a fascinating story. On one hand, we saw the largest outflow from Bitcoin spot ETFs in over a month, a massive $368 million in one day. That's institutions taking risk off the table. But on the other hand, a staggering 17% of all Bitcoin is now held by treasury entities like corporations and even governments. This provides a level of structural support that never existed in previous cycles. Furthermore, some data suggests a quiet institutional rotation out of Bitcoin and into Ethereum, with ETFs attracting billions in inflows last month. This tells us that institutions are not panicking. They are repositioning. They are playing chess while the retail market plays checkers. They see this volatility as an opportunity to accumulate assets at a discount. So we come back to the ultimate question. Is the Bitcoin September curse of 2025 a trap? A final bull trap before a deeper crypto winter? Or is it a calculated shakeout, a manufactured dip to allow institutions to load up before the next explosive move higher? The bearish case is strong. A potential government shutdown, sticky inflation, and the historical weakness of September could certainly push prices much lower. The risk is real, but the bullish case is equally compelling. The market has just flushed out billions in reckless leverage. The underlying institutional adoption trend is stronger than ever, and historically, after the September curse passes, October has been the launchpad for some of the most parabolic rallies in crypto history. Here at Smart Money Sense, we don't predict, we prepare. This crash is a stark reminder that risk management is everything. Excessive leverage will destroy you. A diversified portfolio will protect you. I want to know what you think. Is this the dip you're buying, or are you waiting for more confirmation? Let me know your strategy in the comments below. I read every single one, and your insights help shape our community's perspective. Now you have a clearer picture of the Bitcoin September curse of 2025. But I want to know what you think. Leave a comment below with your biggest question or takeaway. And if you're ready for the next topic, click here. Subscribe to join the conversation. See you in the comments.